income from other sources. Income from other sources is the last head of income. There are 5 heads of income. They are income from salary, income from house property, profits and gains from business or profession, capital gains, and income from other sources. Income from other sources is the last head of income. Any taxable income which is not chargeable to tax under the first 4 heads of income is taxable under the head income from other sources. Classification of income from other sources. Income from other sources are classified into 2 categories. They are incomes specified under section 56 subsection 2 or specific incomes, and the second one is other incomes chargeable to tax under the head income from other sources. Let us see the first category. Specific incomes taxable under the head income from other sources as per section 56 subsection 2. And these incomes are dividends, interest on securities, winnings from lotteries, crossword puzzles, races, including horse race, income from gambling, betting, etc. To be short, these are casual incomes. The next one is income from plant, machinery or furniture let out where it is not the actual business of the assessee. The next one is income from letting of plant, machinery or furniture along with building if such income is not taxable under the head profits and gains from business or profession. Any amount received by the assessee from his employer as contribution to any provident fund or superannuation fund or Employees State Insurance Act 1948 and income received under Keyman insurance policy including bonus. The next income is any person who is receiving the following incomes during the year. Assets and amount to be included in the income. Come to the asset side. The first one is any amount received without consideration and the total amount is more than rupees 50,000. In this case, regarding the taxability, the total amount received is taxable. The second one is in case of any immovable property. If it is received without consideration and the stamp duty value exceeds rupees 50,000. Regarding taxability, the stamp duty value of such property is considered as taxable income. The next case is regarding immovable property received for consideration. First, calculate the excess of stamp duty value of such property over consideration. If the excess is higher than the following amounts, then the excess amount is taxable. And the following amounts are A. Rupees 50,000 and B. An amount equal to 5% of the consideration. Excess regarding any property other than immovable property. If such property is received without consideration and the fair aggregate value of such property is more than rupees 50,000, then regarding taxability, the entire amount of fair aggregate value of such property is taxable income. Next, if such property is received for a consideration which is less than the aggregate fair market value by an amount exceeding rupees 50,000, then the excess of the aggregate fair market value over such consideration is taxable. The above provisions are not applicable if any money or property is received from the following, that is, from a relative or under a will or on the occasion of the marriage of the assessee or from any local authority or registered trust or institution or from any foundation or university or other educational institution or hospitals. Property includes the following capital assets of the assessee. Number 1. Immovable property like land or building or both. Next is shares and securities, jewelry, archaeological collections, drawings, paintings, sculptures and so on, and bullion, that is gold and silver. Relative in case of an individual assessee includes the following: spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, brother or sister of the parents of the individual, any lineal ascendant, that is direct ascendant or descendant of the individual, and any lineal ascendant or descendant of the spouse of the individual. Other incomes chargeable to tax under the head income from other sources. So this is the second category. The first income is all interest like interest on securities, interest on bank deposits, interest on loan received, interest received on delayed refund of income tax, etc. The next is income from subletting the whole or a part of the house property, remuneration received by a teacher or a lawyer for doing examination work, royalty income, rent of land not appurtenant to any building, that is, not belonging to any building. Fees, agricultural income from land situated outside India, income from markets, ferries, that is, ships carrying passengers and goods, fisheries, etc., income from leasehold property, remuneration received for writing articles in journals, interest received by an employee from his own contribution to an unrecognized provident fund, salary of MP and MLA, rent of trademark, director's commission for giving guarantee to the bank, director's commission for underwriting shares of a new company, gratuity received by a director who is not an employee of the company, received by the widow and legal heirs of deceased employees. Following family pensions are exempted from tax. They are: number 1, family pension received by the widow of an employee of United Nations organizations, family pension received by any member of the family of gallantry awardee. Gallantry awards, examples of gallantry awards are Paramveer Chakra, Veer Chakra, Ashoka Chakra and so on. Family pension received by the widow or children or nominee of a member of armed forces who has died on duty. Withdrawn from deposit in National Savings Scheme 1987, on which deduction under Section 80 CCA has been allowed, income from undisclosed sources like unexplained cash credits, unexplained investments, unexplained expenditure, receipts by cricketers selected to play for India. In India, amount actually received by the player after allowing a deduction of 75% of such receipt is taxable. Other matches in India, the entire receipts are not taxable. For matches outside India, amount actually received by the player after allowing a deduction of 50% of such receipt is taxable.